Welcome back to the Deep Dive. This is where we sift through all the info articles, notes, you name it, to pull out what you really need to know. Today, we're diving into something super important for families, getting young people clued up on finance, and, maybe even more critical, giving them a head start on building credit. It's really about setting them up right. Okay, let's unpack this. Our focus, the STEP credit card. Now, I know what you might be thinking, credit card for a teen. It sounds a bit risky, maybe. But STEP is interesting because it bills itself as a credit-building tool specifically for young people who usually, can't easily build credit early. So our mission here is simple. Give you the straight scoop on STEP. We'll look at the features, the pros, and definitely the things you need to watch out for so you can figure out if it's the right fit.
What's fascinating here is just how quickly these financial products are changing, aren't they? Especially for younger folks who grew up online. We're moving way beyond just basic savings accounts now. Tools like STEP aren't just about holding money. They're actively trying to teach good habits, from the get-go. So understanding these tools, especially the ones that help kids learn about money and credit safely, well, it's crucial. It's not just opening an account. It's like laying the groundwork for their financial future. And that's why, a balanced view is so important when you're looking at these things, especially for younger users where learning good habits is, everything.
That's a great way to put it. Okay, so let's dive straight into one of the biggest pluses we found everywhere, the fees. Or maybe the lack of fees on the STEP card. Because honestly, when you're introducing a kid to finance, hidden fees are just awful. A total pain for parents too. But with STEP, you're looking at no monthly maintenance fees, no overdraft fees, no late fees. Pretty clean. Now that sounds basic, maybe, but think about the relief that brings. Traditional accounts, even some kid ones, can hit you with charges that just eat away at savings or, worse, teach the wrong lessons. So for parents, it makes it a very low-cost option. And for teens, they can just focus on managing their money without worrying about getting dinged for a small mistake. It takes away a lot of that anxiety.
It really does. Removing those common fees just makes it so much easier to get started and keep going. It fits better with, a teen's typical situation. It creates a safer space to learn, definitely. Less punitive. When a teen is just figuring things out, those fees can be really discouraging. So this structure, it feels like it prioritizes the learning over just making money off mistakes, which is quite different in the youth banking world. Lets them try things out without big financial penalties.
Right, and practicality-wise, it's easy to use.
Yeah.
Teens can use the STEP card pretty much anywhere Visa is accepted. Online shopping, grabbing food, paying in apps, it works like a regular card.
Yeah, that universal acceptance is key, isn't it? It has to work like a real-world tool. If it only worked in a few places, it wouldn't really teach practical skills. Being able to use it online, in stores, even with Apple Pay or Google Pay, that means they're actually practicing real money management like adults do. Builds real confidence.
Okay, so it's affordable, it's accessible for spending, but what if it could do more? Like actually set up their whole financial future. This next bit, I think, is what really makes STEP stand out. Here's where it gets really interesting. Unlike almost every other teen banking option out there, STEP actually reports payment activity to the credit bureaus. Now, for anyone not totally familiar, credit bureaus are those big agencies, Experian, Equifax, TransUnion, that basically track how well you manage debt. Your financial report card? Kind of. So every transaction with this card, every payment, and this is important because it's technically a secured card, linked to the money in the account, it helps build a credit history. As long as the money's there for the purchase, that positive activity gets reported.
And that credit building piece. It's genuinely revolutionary for a teen product. Usually kids have to wait until they're 18, 19, maybe older to even start. And then maybe they get a secured card where they put down their own money as collateral, or they need a parent to co-sign, which puts the parent on the hook. STEP kind of bypasses that. By reporting positive activity from a card that acts more like a debit card spending money you already have, it gives them a direct path to building credit sooner and, crucially, without the usual risks of actual credit card debt.
So we're not just talking about getting a good score for a loan down the road, are we? It's about building that financial reputation that affects so much. Renting an apartment, getting better car insurance rates, eventually, getting a mortgage with a lower interest rate. This early start isn't just nice to have, it's actually strategic. It could smooth out so many future hurdles, puts them ahead in a way many of us probably weren't when we started out. We could be talking potentially thousands saved over their lifetime just from having good credit early.
Exactly. Building that positive history early really can save them money and hassle later. It's more than just the transactions. It teaches responsibility, shows reliability. Those are the building blocks of good credit. It shows them their financial actions matter, long-term, but it does it in a controlled, low-risk way. That early exposure, without the danger of racking up high-interest debt, that's a powerful learning tool.
Makes total sense. And besides the credit part, there's another handy feature in how they use the card. STEP gives teens both a physical card and a virtual one, which is great. If the physical one gets lost or something, they can still use the virtual card online securely. They'll be completely stuck.
That dual card thing is smart. Adds convenience and a bit of security, too. In today's world, having both makes sense. Virtual for online, physical for stores. And yeah, having the virtual one ready if the physical card is lost or stolen. That's a modern fix for a common headache. Keeps things moving.
Okay, now, let's shift gears a bit to savings. STEP does have savings features in the app. Teens can set goals, which sounds good for teaching good habits, right? Like they can label money for something specific. They want a new game maybe, or saving for college, and move funds into those goals right there in the app.
Yes, and that ability to set goals is definitely a plus for teaching budgeting and saving for things that helps visualize progress. But, and this is a really crucial caveat, the money sitting in those savings goals, it doesn't earn any interest, none at all. Think of it more like digital envelopes or a virtual piggy bank helps them organize and save for specific things, which is a great habit. However, if earning interest is important to you or you want savings to actually grow over time, well, this feature might feel a bit basic. It's more about the habit of saving than the return.
That's a really key point to understand. Teaches discipline, maybe, but not wealth building through interest. And speaking of things it doesn't do, it's worth mentioning. STEP lacks some features you might expect from, say, a regular bank account. Things like mobile check deposit, taking a picture of a check to deposit it, or setting up direct bill payments from the account. Now, maybe not every teen needs those right away. They might not get many checks or pay utility bills yet, but depending on their situation, maybe an older teen with a part-time job or one managing more complex money stuff, well, that could be limiting. If you're looking for an all-in-one bank replacement, you might find SEPI doesn't quite cover everything. Definitely something to think about.
Yeah, this raises an important question for you, the listener. What's the main goal here? If it's primarily credit building, safe spending practice, and basic goal saving, STEP looks pretty strong. But if you need a full-service bank account interest on savings, check deposits, paying bills directly, then you might need to look elsewhere. Or maybe use STEP alongside another account. It's really about matching the tool to the job,
It's exactly. Now, let's be honest. No product is perfect. We need to talk about the practical limits. While STEP is great on the common fees, there are some fees for depositing cash. That's an important detail.
Right. This is key for a fair picture. Lots of teens still get cash allowance, gifts, maybe a job. You can deposit cash at places like Walmart or Walgreens, which is handy. But you get the first two free each month. After that, it costs $3.95 per deposit. So if your teen gets cash often and needs to deposit it regularly, those fees could definitely add up. Kind of works against the no fees headline a bit in that specific case. Worth calculating in.
Good practical point. And it's not just cash fees. There are also limits on the account balance and how much you can spend daily. The account maxes out at $10,000, and there's a $10,000 daily spending limit. Now, okay, $10,000 might sound like a lot for a teen account, maybe not an issue for most. But what if they get a big graduation gift, say $5,000, and they're saving hard for a used car, another few thousand? Suddenly, that $10 limit might actually feel a bit tight for bigger goals or consolidating funds.
Yeah, those limits are generally there for a reason, partly to reflect typical teen spending, partly as a safety measure. The $1,000 daily limit also stops huge impulse buys and limits risk if the card details somehow get compromised. So they are sensible controls, but yes, they do mean it's not unlimited. If we connect this to the bigger picture, these limits sort of reinforce that STEP is designed as that first step, that learning tool, rather than a primary bank account for handling large sums or major transactions. It's about controlled exposure.
So wrapping things up a bit, it really feels like the STEP card emerges as a strong option for parents wanting to teach financial literacy and get that crucial credit building started early. All without the scary parts of traditional credit cards, like interest charges and potential debt spirals. It offers a structured, relatively safe way to learn financial responsibility and build that foundation.
Absolutely. But at the end of the day, the choice has to match your specific needs and what you want your teen to learn. If building credit early and practicing spending safely in a low-fee setting are your top priorities, then STEP makes a really compelling argument. It's a great way into the credit world without the usual dangers. But If you really need interest on savings or those traditional banking features like check deposits, then yeah, you might need to look at other options or maybe use STEP as part of their financial toolkit. Not the whole thing. It's about finding the right tool for your specific goals.
So, what does this all mean for you listening? Our deep dive shows Step Redia has some genuinely unique advantages for teens, especially the zero common fees and, yeah, that groundbreaking early credit building. It gives them a structured way to learn. But, like any tool, it has its limits, right? It's not quite a full bank account and no interest on savings. The big takeaway, making an informed choice is key. Understand the pros, understand the cons, and pick what really works for your family. And as always, especially when setting up accounts for kids, maybe have a chat with a financial advisor first, just to get personalized advice.
And maybe just one final thought to leave you with. As you help the young people in your life navigate money, think about what's most valuable at different stages. Is that hands-on experience with spending and credit building, especially during these teen years, maybe more crucial initially than just squeezing out maximum interest on savings?
It's an interesting question, right? Because the habits they form now, they really can shape their whole financial future.
That's a great point to ponder. Really highlights the long game here. Thanks so much for joining us on this deep dive into the STEP credit card. We hope this gives you the clarity you need to make smart choices and keep exploring the always evolving world of financial literacy. We'll catch you on the next deep dive.